Morning, guys. Good morning. How you doing? Hope you're doing great. Hope life is treating you right. Hope you're ready to learn something. Maybe all 9 of you, 10 of you. Man, here we go. Awesome. Hope you guys are doing awesome today. Hey, what's up, Marty? Good morning, Andy. Morning, Ron. Hey, Steve Diego. Nice to see you. Let's do first things first, because that's the only thing you can do first, right? If it's first, let's check news. forexfactory.com/calendar. At 8:30 today, there was core retail sales and retail sales. Something about M&Ms. And if you were watching the market, it moved a little bit, Ron. It gave a little push. Nothing crazy, but it could have been. So every time I wake up, which is almost every day, the first thing I do is I come take a look at news, and I just make sure there's not something high impact getting in the way. Nothing else really going on. 9:15, it's a lot of low impact coming on. Probably not going to be a market mover. We're going to talk about this stuff, all the stuff coming from the Nexgen page. No secrets, none whatsoever. Excuse me. But we're going to talk a little bit about how to learn, guys. And I know it seems weird, right? Mark, I've been learning my whole life. I don't need you to tell me how to learn. Well, I'd like you guys to listen if you don't mind, especially my new people. The human brain complicates things. It always does. The human brain does its best to make the most simple things difficult. My brain apparently isn't human, and it goes the opposite. And I try everything in my power to simplify, to make it easy, to give each and every person in this room the fewest things to think about every time they're looking for a trade. Sometimes I'm successful, sometimes I'm not. So what I do each and every day, and let me go to the glossary of common terms, is I start my day. My first hour every day is exactly the same, and we talk about only one trade. And guys, I've been training people to read these indicators for a long time. And I can tell you, if you keep it simple in the beginning, if you keep it very, very focused in the beginning, it's crazy how easy it can be. And I know that doesn't seem right. But trading doesn't have to be difficult, guys. Trading is nothing more than patterns, and that's all it is. It's ups and downs in the market. It's things that repeat themselves. And what Nexgen has done is, hey, good morning, Erla, is Nexgen has spent the last 28 years almost teaching people to trade patterns, identifying patterns, and then creating rules. Hey, good morning, Trina boy. So what we're doing in this classroom is we're building this crazy awesome foundation, and we're becoming chart readers is what it is, and we're doing it with a high probability trade. The high probability trend trade, the way it's taught in this room, guys, this is a trade that typically wins 70 to 80% of the time. This is a trade that win percentage creates confidence, guys. And one of the biggest things I think in trading, and maybe one of the most understated advantages that you can give yourself in trading, is believing your rules, is trusting your rules, and trusting your rules to the point to where you don't let your guts take over. Hey, 10K, good to see you, man. Long time no see. So we're going to talk about a trade when each indicator on every chart agrees with the rules for the trade, guys. When the triggers are the strongest, when there's no termination conditions, when there's nothing between you and your target. This high probability trade, guys, it's the first trade. It's not the only trade, but this is the trade that is going to teach you how to read your indicators. And that's really my job in this classroom, is to take you from a point of knowing nothing, which is okay. That's the best place to start. No bad habits. And putting you in a position to recognize 3 trading rules being met. Because the 3 rules create a statistical advantage, and the 3 rules have been proven to win more than they lose, and the 3 rules create confidence, and the 3 rules make you a chart reader. And 90% of your day is spent reading charts. 10% of your day is trading. I was up at 4:45 Central Time this morning. I opened up my charts. I started watching them. I have taken 2 trades that fit my rules this morning. I've been in the market a total of about 3 minutes out of the 180 that I was watching. And it worked out great because I had advantages. So you're going to understand how to read your indicators. And once you can do that, once you get some reps under your belt, you will understand where the market is likely to continue, you'll understand where it's likely to go, and you'll understand where it's likely to stop. These are the concepts that are going to take you to the next trades. They're going to open the doors for more opportunities, but we're going to keep it very simple in the beginning, and we're going to keep it very, very focused on the high probability trade. And this is it. I had someone tell me once, there's no way this works. There's only 3 rules. Hey, good morning, Sid. What's pretty cool is if you learn these 3 rules, you'll realize that it does work, and it works well. Each rule, when it's met, gives you an advantage. It tells you that something's going right. Something's in your favor. Something's creating this advantage as you look for a trade. So your first rule will give you the advantage of momentum. Your second rule will be what we call a clear path. Nothing between you and your targets, giving you room to get paid. And then your third rule, guys, this is specific to the high probability trend trade. This is your entry, pinpointing where the market is most likely to continue. Now, this is the part that I want you guys to listen closely and take to heart. If you, whoops, that's on the wrong one. Here we go. If you learn how to recognize momentum through strong triggers, and you learn how to recognize a clear path by being able to identify termination conditions, this sets the tone for the rest of your trading career with the Nexgen software, guys. These are the 2 advantages that once you're good at them, you're going to start to see things. Once you can identify strong triggers, once you can recognize a termination condition, it's almost like a red light, green light. You know when it's time to trade, and you know when it's time to sit still. So as I go through the day, I want you to understand that we're not looking for a trade. And this is especially for my newer folks, for Jeffrey and Trina Boy. It feels like a lot coming at. And if you put the pressure at yourself to look for trades before you can read your indicators, you're going to get frustrated. But if you wake up this morning and you say, I'm going to learn how to identify momentum. And I'm telling you, identifying momentum will take you a day tops. And then I'm going to learn how to identify a termination condition so I know if I should be sitting on my hands or if I should be looking for a trade. Guys, this is 3 to 4 days of study. It's a little bit in class, a little bit of listening, ask some good questions, and then a lot of picture taking. And then finally, this first entry area, this is the one, guys. This is the one that typically wins 70 to 80% of the time. So the recipe for a trade is not your desire to make money. It's not your need to pay a mortgage. It's not your kids that need braces. Guys, a trade is nothing more than taking momentum, adding it to a clear path, and then finding an entry area. And your entry areas will grow as you grow. These 3 rules, once again, simplicity, happen on only 2 charts. And just to make it even easier, your first 2 rules can be identified with the most current bar on a large chart. This large chart's a very broad stroke of a brush. It shows the overall opinion of the market, guys. This large chart on that first bar will define the direction you should be trading. It will let you know if you have the advantage of momentum through rule number 1, and it'll let you know whether or not you have a clear path. It will define the areas that are problematic through rule number 2. Once those rules are true, you're going to go to a small chart, and this is your X-ray. This is your refinement chart of that broad stroke. Inside of this 1 bar on this slower moving chart is typically 15 to 30 bars on a small chart, depending on the market action and how squirrely they're getting. But what the small chart does is it literally refines this broad stroke of a brush, and it pinpoints the best of the best area for entry. It pinpoints where the market is most likely to continue, and it pinpoints your entry for the highest probability trend trade, guys. And by using this refinement chart, you're going to be able to reduce risk dramatically, and you're also going to be able to increase your profit potential. That's rule number 3. And again, rule number 3 is specific to the high probability trend trade. There's a lot more trades out there. I like you guys to remember who you're trading with and who you're trading against, guys. The large chart is the large crowd. These are the people that have the money. These are the people that create the trends. These are the people that establish the momentum. These are the people that react at those key areas on your large chart. And when you trade with them, it's easy. You're in the lazy river, you got a pina colada, life is good. When you fight them, it's like swimming upstream, guys, and salmon die. So I don't know where that came from. Trading with the large chart tends to be the most advantageous. But there is a small crowd. There's a bunch of people with a lot of money that can create ripples in that large crowd flow. And they create little pushbacks, little retracements. Rule number 3, by using that small chart, is going to have you pinpointing exactly where these guys are most likely to fail. And they typically fail 70 to 80% of the time, which means that when you pinpoint their failure, you're actually entering the market in a trade that typically wins 70 to 80% of the time. It's the other side of their loss. And that's where the small chart comes in, guys. We're just going to let them fight, and then we're going to take advantage of their losses. Seems devious, but it's a pretty wonderful thing for us. There is a rock solid, proven without hesitation, I tell you, path to becoming a confident trader ASAP. This path has been in place for a long time. I fought this path tooth and nail in the beginning because I'm so damn smart. Don't be like me. Guys, post your trades in the room. I can't stress this enough. The more you post in the room, the more questions you ask, the more pictures you show me, the more chart reads you share, the faster you will get to where you want to be. It's intimidating to post in the room. It really is, because what if you're wrong, right? Guys, I want you to be wrong in the beginning. I want you to see every mistake so that we can work together to learn how to fix it. So we're going to learn the rules for when it's okay to trade. There's only one time when it's okay to trade, and that's when your rules are met. If your rules are not met, you need to have a black belt in sitting still. I mean, you need to be a pro at doing nothing. You guys simulate, practice. Don't wait until you think you have this figured out to start practicing. It's okay to make mistakes. It's all right to not do it correctly. It's even all right in the beginning. You shouldn't put the pressure on yourself to be perfect. You're going to break rules. You're going to make mistakes. But it's the mistakes, it's the rule breaking that create the great lessons. I promise you. Post them in the room and tell me what you see on that chart. Tell me why you did what you did. Show me where you did it. And you're going to do that with TechSmith Capture. Let me see if I can find mine. You all have it. If you are in my room, you have TechSmith Capture. And TechSmith Capture, for whatever reason, will not open up on my computer right now. TechSmith Capture is how you're going to take a picture. It's how we're going to talk. I'm going to try one more time to see if I can get this. I'll run it as administrator. Maybe it'll work. Maybe it won't. I don't know. I'm probably breaking stuff. TechSmith Capture is just how we talk. So there's a Snagit version, and I use Snagit, and I'll show you exactly what it looks like. And TechSmith is just the same, guys. You can click your capture button and show me exactly what you want to show me. And you can talk about what you see, and you can talk about what you did, and you can show me where you did it. And guys, all it is a private session for you. Eventually, we're going to get to the point to where you're sure you have the correct rules, because rules have been proven to win more than they lose. They create an advantage. And the goal is that you don't practice the wrong trades, because we all get lucky. I'm not going to pull myself out of this equation. We all get lucky sometimes. We may fight stuff and we win anyway, and that feels good, guys. It's a short-term victory, but it's the path to long-term failure, because for whatever reason, the second you go live, luck seems to run out. So posting in the room is the first, guys. There is no limit. There is no too much. There's no way you can ever annoy me by asking questions. That's what makes this classroom great. We're going to simplify. It says 2 trades. I'm going to give you a plan with 2 trades on it, but this first hour is focused on only one trade, high probability trend trade. The recognition of the first 2 advantages is the key, and then finding the entry when they're present. But you've got to know what looks you're going to commit to. I'm going to teach you how to study it to go back to build trust, and you've got to learn the looks so that they're easy. And that's the second piece in becoming a confident trader ASAP. Post your trades in class and track your real-time performance in the sheet. And guys, the real-time performance, I don't think that's the most important part of this sheet. The first tab on the spreadsheet, the one that you get when you download the software, the one that I give you every day in this classroom, I just dropped it in for you. This is your trade journal, and your trade journal is nothing more than, hey, this is the trade I took, and here's the picture of it, and there's those two advantages that Mark seems hell-bent on teaching me. Did I win or lose? And then most importantly, there's a feedback from class section, guys. If you do this, you're going to see patterns that are helping and hurting. And if you come back to this every day, let me go to this picture, and you study that trade journal and you say, all right, what worked? Well, what's working is the pattern that you want to follow. Maybe you're even inventing a new trade, who knows? But you're going to see this thing that seems to be working over and over, and you're going to begin to develop trust in it, and that's what you're going to focus on. And then there's things that don't work, and that's probably where you're going to need the feedback from class, because if you're truthfully putting it in here, you're going to see loser, 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 indeterminate, determined, determined, and now you have a pattern that you can avoid. Everybody has a thing, guys. Some of us jump in early, some of us stay in too long, some of us get out too early. When you post in the room and you tell me what you see, when you post your trades in the room, one of the most annoying gifts that I have is that I recognize patterns, and I recognize patterns in people. So I'm going to be able to look at your charts and say, man, you're an early jumper, you're a late leaver, you're a trend fighter. And then every time you post in the room, we're going to get one step closer to being where you need to be with your reads, with your trading, because we're going to work together to fix what needs fixing. You got to learn the looks so that it's simple. The second tab is Rule 1 in green, Rule 2 in green, and Rule 3 in green. And a trade is nothing more than putting those together. That's all it is. It's 3 rules creates 1 trade. On this basic rules page, I also have sections for what it looks like when those rules aren't met. Because I think you should know both. Because this red section says, hey, don't take the trade, new user. Don't do it. Not yet. It's not time. And the green, if you got 3 of them, green means go. There's the client trades. This is where I steal pictures from you guys in the room. I'm shameless. It happens. There's the client perfect trades, guys, in green. There's almost 400 pictures of you guys using momentum and path to find a way to get into the market. And most of it is winners. But I'm going to tell you that there are losers in this spreadsheet. I've taken pictures from the room and dropped them in here for study because the pictures follow the rules. And the rules have been proven to win more than they lose. But anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. So Trinaboy, Jeffrey, Ron, Erla, Steve, Hamid, losses aren't failures. Losses are a normal part of a positive equity curve. Losses don't mean that you did something wrong. It just means that the market wanted to do something else. So if you're focused on following the rules, what happens is you will take losses. And that's okay. Our goal is to take the correct losses and to not take avoidable losses. And avoidable losses mean your advantages weren't present. So you're going to see a lot of great pictures in here. There's the entry sequence for longs and shorts for that high probability trend trade. There's the management plan. Guys, I'm going to give you a written plan to follow as a brand new user. But it's very remedial. It's very basic. It blankets you with all of these rules. And then you'll find ways to get outside of that plan as you become a chart reader, whether it's management, patterns that you see, or maybe you move to the NASDAQ eventually. And then finally, there's a place for you to build your plan. If we're learning looks, guys, I'm telling you from the bottom of my heart, you will become an accomplished trader faster. The more pictures you take, the more charts you annotate, the more times you create a visual representation of what you're looking for, and then type out what it means to you. I've been watching this for 5 years, guys. Fill this up with pictures. Just a little insight into my life. This is 2024, and I'm at 76.32. Yesterday, I told you guys I was at 75.90. I'm 40 pictures deep in the last day, guys, because I'm in a constant state of learning. I'm always taking pictures, and I take pictures of everything I do, and that's one of the reasons why I recognize these patterns so quickly. So keep it focused and learn. My promise to you is that you'll have everything that you need by the end of this classroom to be successful with the software. Everything with the exception of the experience. You're going to have to do some work. You're going to have to learn a couple things, and you're going to have to ask for a little bit of help. And I'm going to remind you guys, everybody who's ever been successful in the world, I think, has had a coach. Whether it is sports, whether it is business, whether it is politics, mentor is huge. Coaching is huge. Guys, I am your coach. And I get to sit on the sidelines with zero emotion as you trade. And I get to look at what you did, and I get to lob you little bits of wisdom to help you do it better. Take advantage of that. This classroom is your classroom. So we're going to go through 3 rules. Large chart leads the way. All right, so Jeffrey, Trinaboy, is Dennis in here? No, M's gone. Small class today, that's okay. Large chart defines the direction you should be trading. So green is up and red is down. If you're colorblind, let me know. I'll show you how to circumvent these colors. But if the background is green, we're going up. And your best chance of success comes from looking for the rules to be met for high probability trend trades long, the same way when it's red, looking for rules to be met for high probability trend trade short. Just because it's green doesn't mean there's a trade, and just because it's red doesn't mean there's a trade. It just gets you steered in the correct direction to trade with the trend. So the easiest lesson you're ever going to get is strong triggers, guys. Strong triggers provide the advantage of momentum through rule number 1. And in an uptrend, strong triggers means that your small triggers, these solid lines, are up and above the large triggers, the dashed lines. There has to be space between the two. The triggers are wide, they're angled in the direction of the trend, and it's that space that lets me know that the odds are favorable for the market to continue up. I like to paint the picture in your head. Think of scissors that are open. And when the blades of scissors are separated from one another, guys, you can cut, you can get work done. In a downtrend, small's below the large, large are wide, space between, my scissors are open. The odds are favorable for the market to continue down. Momentum is universal. Whether it is a large chart or a small chart or a range chart or a day chart or a stock chart or a futures chart or an options chart or a crypto chart, momentum will always be momentum, and it's that separation that gives me the advantage. Here's your little cheat code. If the background is green, the small and large have to be green. And if the background is red, the small and large have to be red. And if they're not, you don't have odds favorable momentum. You do not have strong triggers. And odds favorable momentum pushes a market, guys. And odds favorable momentum, you'll see it OFM in the classroom. It can break key areas, and odds favorable momentum can even cover up a lot of the mistakes that we tend to make as new users. And sometimes it gives us second chances when we become a little more experienced. So strong triggers leads the way. And you got to know the opposite. If strong is space, weak is closed. The scissors are closed. The smalls return to the large. And once this happens, guys, this is a weakening of the trend, and anything can happen up or down. So I'm going to open up a big chart real quick, and we're going to see if we can identify momentum, and it sure looks like we can. And let's just take a picture of it, because I think it's easier. Take the pressure of watching a moving market off of you. Separation between the small and large, the large are wide, guys. Odds favorable momentum. Can you give me a Y new users if you see it? Because when you have this look and there's nothing in the way, you're going to buy or sell Fibonacci support. And then, guys, small's below the large are wide, the space is there. This is your strong triggers. Learn this look, because this is when you're going to look to sell Fibonacci resistance. Those tails on a big chart are pullbacks on the small chart. You're going to learn how to identify them with all that momentum. And then with the smalls inside, there's where your reversal came from. Smalls inside, that's where your reversal came from. And guys, can you give me a Y if you see that the two colors don't match right now? That the larger green, that the smaller red? I can never have odds favorable momentum in this instance, guys. I've forfeited rule number 1 in this look. Jeffrey, you're good with it. Irish MKC, you better believe it. I love it. Momentum is key. And this is what it looks like, guys. This is a 4-hour snippet on a large chart. Just looking for rule number 1, scrolling back. And anything can happen triggers. That's what we call it when we have weak triggers. Anything can happen up or down. You'll notice that when it was there, that's where the market reverses. And then with odds favorable, there's one of those tails to pinpoint, and it carries all the way to weakness where it reverses and strength pushes. And then we get those colors that don't match. And this is the fight between buyers and sellers, guys. This is the fight between those strong forces. You don't ever have to be a part of that fight. If the colors don't agree, if your large are red, your smalls are green, you don't have momentum. Rule number 1's not met. If the background is green and the triggers are red, you don't have that advantage. The rules aren't met. Sit it out. Go make a sandwich. Eventually somebody's going to win. Eventually you will get that odds favorable momentum. So I'm going to ask again, guys, I encourage you to give me a Y or an N, not because any reason other than if you say, no, Mark, I'm not really cool with momentum, I'm going to go back and find a new way to describe it. I'm going to find a new way to give it to you. I can't see if you're confused. So participation is key. Guys, once you have momentum, once you have a market that has the potential to push in the direction of the trend, once you have something that has the power to break key Fibonacci areas, once you have something that will cover mistakes, we're going to make sure that we have a clear path, guys. And rule number 2, no termination conditions. Make sure you have room to your profit targets. A termination condition is a Fibonacci-based indicator that has the potential to stop the market, may reverse the market, guys. And it's essentially lines on a large chart, horizontal lines on a large chart. Should the end of the trade immediately if the trigger color change opposite of the background? Not necessarily, Jeffrey. So what you're doing is you're talking about management. And let me show you something. The background doesn't change until the small triggers get below those large triggers. Jeffrey, I would hope that you would already be out at Fibonacci resistance and in a holding pattern before that ever happened on a large chart. Does that make sense? So if you were in a short trade and you waited for the color change, oh my gosh, you would be so far against your trade. I hope that makes sense. And this is where rule number 2 comes in. Because when you have momentum, you can trade to these key areas. You can trade away from these key areas. And these key areas will get you out of the market long before the colors ever change. And guys, we're looking for divergence highs and divergence lows. And Jeffrey, let me know if that answered your question. But I think you will be well out of your trades long before the colors ever change. Divergence is a way of saying there was a loss of momentum in a pivot, guys. All the calculations are run in the background. You don't have to do any math at all. You'll see a magenta line and a negative number print off the top of this pivot if momentum doesn't follow price. And you'll see a cyan line and a negative number print off the bottom of this pivot if momentum doesn't follow price. Guys, a loss of momentum is just a loss of momentum. It's not a termination condition. It's not an indication of reversal. All it is a loss of momentum. But that line that's created is the horizontal line that could stop the market. We also have Fibonacci resistance. And guys, I would encourage you, know what these look like. Commit them to memory. When the market is trending up, Fibonacci resistance is a point where the market may stop, or it may bounce, where it may reverse completely. And Fibonacci support, when the market is trending down, is a place where the market may stop, may bounce, or reverse completely. And guys, you see these areas long before you ever get to them. There is no surprise attack from fibs or divergence highs or even these yellow 1-to-1s. And these may behave as support or resistance. And these lines are where the large crowd is making decisions. These lines are where the large crowd can fight, where they may enter, where they may exit. And I posted this room in the earlier, and I'm going to post it again, guys. And this is without a doubt my favorite thing about the Nexgen software is decisions are made at key areas. And this small chart right here shows the fight between buyers and sellers right at Fibonacci support. And you can see how the market goes sideways and it's chaotic and they're jockeying for position. And guys, you know where they are before the market ever gets there. And you have a rule designed to keep you out of that fight. And that's what we're doing right now. If decisions are made at these lines, we're going to let the market get to the line. And this is your recipe for termination conditions. Price reaches resistance. Where are my triggers? That's all you have to do. Price reaches a red line. Price reaches a divergence high. Price reaches yellow 1-to-1s. Where are my triggers? If they remain below, guys, this is a termination condition. This is a point where decisions are made, where the buyers may exit their position, where there may be a busload of sellers waiting to enter. This is places that could create an untradeable bounce. There could be those fights, or it may reverse the market completely. And if it reverses the market completely, meaning price reaches resistance, the triggers stay below, and my large triggers roll from green to red, right there where they turn red, that reversal calls this a strong top, guys. And a strong top is the precursor to the highest probability trend trade that you can take. And a strong top is the baseline. Rule number one for high volume area trades, for momentum trades, for white bar trades. And a strong top or bottom creates an advantage. It's not mandatory for the high probability trend trade, but it definitely gives me warm fuzzies when my trade sets up after it. So the market goes down and it reaches Fibonacci support. Now decisions are being made. The decision may be to break, it may be to bounce, it may be to fight, and it may be to reverse completely, which gives me a strong bottom. And the truth of the matter is, I'll never know what the reaction's going to be. I'll never know if it's going to stop the market or if it's just going to break completely and instantly. But every time I reach a line, my trigger lines tell me the story. So price reaches and then I'm done with price. It's all on triggers. Price reaches and then I'm done with price. It's all triggers. And guys, if rule number 2 is not met, no trades into the area. So I'm going to ask, before I go to clear path, check it out. Price reaches Fibonacci resistance, none of the triggers break, the market goes down. Price reaches a divergence low, none of the triggers break, the market goes up. Divergence low, triggers don't break, market goes up, right into resistance where it fights. There's that fight. Rule number 2 helps you identify. Guys, Fibonacci is freaking amazing. Look at the bounce. Look at the bounce. All you have to do is scroll back and you'll learn to trust these key areas. You know where they are and you know precisely that they can ruin your good time. But areas do break. That's why we talk about areas breaking with momentum. This is what it looks like when an area breaks. When price reaches Fibonacci support and the triggers are above, I have to sit on my hands and do nothing because I don't have a clear path. I don't have room to my profit targets and this area may create a bounce. Once my small triggers and my large triggers get below support, then support is broken and my path is clear, and it remains clear until I reach the next area. And what you'll find is that when support breaks, it behaves as resistance. And very often, we're pinpointing entries right at that pullback and retest of an area, trading away from an area that's broken rather than trading into an area that we don't know if it'll break. So price comes up and it reaches Fibonacci resistance right here. All the triggers are below, and as much as I wish I was in a long trade, I don't have a clear path and I'm going to sit on my hands. And I sit on my hands for about 15 bars worth of knowledge. And then finally, my path is clear. And resistance becomes support. And that path remains clear until the next area is reached. And it really is that easy to identify whether it's clear or not. So check it out. Whoops. Hold on. Dun, dun, dun. Where's my big chart? Oh my gosh, I deleted my big chart. Oh no. Guys, if you ever accidentally delete a chart, instead of building it, go to your workspace and close your workspace and just don't save it. And then when you come back, it'll be there. There's a little trick for you. So now let's look at a different market that I didn't delete the large chart on. Oh my gosh, holy, rule number 2 in crude oil. Look at that. Support, resistance, don't break, don't break, don't break, don't break, don't break, don't break. Oh my gosh. I didn't have to get caught up in any of that nonsense. Here we go. Smalls and large get above, the area is clear until I reach the next area. Smalls and large get below, the path is clear until I reach the next area. And guys, it really is that simple. And once you understand the difference between a termination condition, price reaches the area, where are my triggers, and a clear path, both of my triggers are beyond the area that was problematic, it opens the door for the second trade. And this is going to be your first medium probability trade. And a medium probability trade is defined as a trade where most of your indicators agree for the rules of the trade. However, a small issue exists. What you're identifying is that small issue with your chart reading, an area that hasn't yet been broken. And you know that it has the potential to break because 50% of your triggers have broken through. Your small triggers smash through the area, and the large triggers lag behind, 50% lag behind. And there's odds favorable momentum. There's that separation, guys. And that momentum and that trigger location lets me know that this area has the potential to break. But the area is not broken because the large aren't below, which means that it's not a clear path, which means that rule number 2 isn't met, which means that I'm going to have to manage a little more assertively. And I can tell you right now, it takes a little bit of chart reading to do that. That's why we focus on the high probability trend trades first. There will be times when your path is not clear, and this is frustrating for a lot of new users because there's stacked areas, and this is 90% of your day. Reading indicators, waiting for advantages, believing in your heart that your money is worth a clear path. And guys, the futures markets trade an average of $220 billion an hour, trillions of dollars a day, and you don't need to be in every move, guys. Focusing on having your rules met. It takes $400 a day. Trinaboy, Jeffrey, it takes $400 a day to put you in a 6-figure income. So let's look for the best moves, not all the moves. Every swing isn't mine, every tick isn't mine, every top isn't my entry, every bottom isn't my entry. And guys, that's your core. That is your core right there. Momentum from strong triggers, clear path from no termination conditions. So I'm just why whoring today, guys. Give me a why in the room if you're comfortable with the idea, not only of momentum and a path, but that the large chart, everything has happened on the large chart, guys. The large chart defines momentum, direction. It defines those termination conditions. If you let the large chart be the reason you look for an entry, you're not going to get suckered into that siren song that is the small chart. Whoops. People are calling me. So once those rules are met, once the large crowd has told me that they're going up strong, that there's nothing in the way, I'm going to wait for the small crowd to fight, guys. And this is how I pinpoint my entry. And I pinpoint it with such precision that I'm going to use a limit order to buy or sell that pullback created by the small crowd. And I'm going to have that limit order waiting in an area inside of favorable large triggers. And I'm going to dissect the whys of the entry, if you will. We're going to use a limit order to buy or sell a pullback in an area inside of triggers, guys. Triggers, large triggers, are where price tends to return. So if I open up this large chart, I want you to see something. I'll do it with the picture so you can see it. Price pulls away from the triggers and it returns to the triggers, and away and two, and away and two, and away and two, and over, guys. And this is a pretty awesome phenomenon that happens all day. Your large triggers kind of define where price is most likely to return. So on your entry chart, we have the large triggers, which are smooth, and we have the synthetic triggers, which are kind of stepped. And the synthetic are just the large chart, large triggers. And what you see when these triggers are on the small chart is precisely where price is most likely to return. And then once I have an area inside, fibs, midbands, or yellow 1-to-1s, I have something for price to bounce off of. And I always say this is like throwing a tennis ball as hard as you can. And I don't expect the triggers to stop it The triggers are where I expect the tennis ball to go. The areas inside, fibs, mid-bands, or one-to-ones, are where I anticipate that tennis ball to bounce. So when I'm looking for a long trade, of course the first thing is that my rules are met, that my large chart is going up, that my large chart has momentum, that my large chart has nothing in the way. And this is what your small chart's going to look like, guys, and you're going to get that fear of missing out, that desire to be in a trade, that wish you were getting paid. The best course of action, typically for the new user, is sit on your hands and do nothing and wait for the pullback. Wait for the fight to start. And the reversal bar signals the beginning of the fight, the beginning of the pullback, the beginning of the retracement, whatever you want to call it. And at the time of the reversal bar, the first thing you're going to do is you're going to identify your trigger lines, large and synthetic. One is not more important than the other, guys. Your trigger lines define where these price bars are most likely to return. And once you have your trigger lines, you have to look for the areas inside. Notice that inside is in all caps. This is a very important part of the precision because the areas are where the market may bounce. And very often you'll have more than one area, guys. So you're going to create a window of opportunity, a woo, from the highest point of support, which happens to be a mid-band, to the lowest point of support, which are these one-to-ones. And that blue shaded box, this is precisely where the trend is most likely to continue. This is where the small crowd is most likely to fail. Because of those advantages on the large chart, your limit order goes a tick or two above that highest point of support. And you will literally wait for the market to come to you. You will buy the market on its way down, understanding that you're entering where the market is most likely to continue up. And once you can pinpoint where the market is most likely to continue, you understand synthetic triggers are only on the small chart, Nanda. These synthetic triggers are superimposed from the large chart so that you can create that range where the price bars are most likely to return on both charts using only one. Does that make sense? I'll find a picture that kind of illustrates it too. And then the areas inside, those are where it's most likely to bounce. And let me just go to a little side note here. If you believe in the idea that price returns to triggers, what it does is it gives you this precision. Because when they're one on top of each other, you've only got one spot where they're likely to return. So Nanda, check it out. I put a circle around the large triggers on the large chart and a box around the large triggers from the small chart, and see how they're in the same range? That's precision, guys. So the areas inside are where it's most likely to happen. And now check out what happens when you have large triggers on the large chart all the way up here and large triggers on the small chart all the way down here. That separation creates indecision. So that's why we teach, let them overlap. Let it be easy, guys. And then once you understand that this is where price is likely to return, once you understand that this is where it's likely to bounce, you understand that any line below those triggers for a long trade, anywhere on the wrong side of those triggers, this is where the market shouldn't go. And you're going to use that concept of where the market should not go for management. This is where your initial stop's going to be. You're going to force them to get past all the good stuff, to take away your advantage. And if they do, you'll exit, and you'll exit for a loss 20 to 30% of the time. 7 to 8 out of every 10 trades you take are more likely to win than lose, but 2 to 3, you're going to get hit. So in a downtrend, we're going to go through the exact same process. Love futures, I'll make it either way. Everything says down on the large chart. My trend is down. My strength is there. My path is clear. And I'm just going to wait for a reversal bar. I'm going to sit on my hands. I'm going to anticipate. I know it's coming, but I'm not going to jump in fearfully, guys. I'm going to wait for that reversal bar, and I'm going to say to myself, once I get this, I'm going to find those triggers. And I probably already found them as the market's coming down, because this is where these price bars are most likely to return. Notice they didn't bounce off the bottom of the triggers. This is just showing me where the price bars are likely to return. And then the areas inside, fibs, mid-bands, yellow one-to-ones, well, that's where it's most likely to bounce. Guys, this is one line wide where the market is most likely to continue, where the small crowd is most likely to fail. I have to put my limit order 2 ticks below it because I'm not going to trip over a couple pennies hoping to save a few dollars. Guys, this is my entry for the highest probability trend trade. And I know that anything on the wrong side of the triggers, anything above these triggers, this is where the market shouldn't go. So this fib, that fib, this fib, and 1-to-1, none of these are part of my entry equation, guys. Actually, my stop is going to sit up here because once I blow through triggers, once I blow through the bounce point, my advantage is gone and I no longer want to be in that trade. Does that make sense? I hope so. You're going to have to practice this a little bit, guys. And I'm going to give you the big warning right now. It's not really a warning. Guys, this is human nature. The fear of missing out is real, and it causes investors to make bad decisions, to enter early, to create huge stops with the hope that things work out, guys. And this number one entry, this is your fear of missing out entry. And I see it all the time. People jump in right before the reversal bar. It's like they're waiting for you to do it. All you've done is shorten the distance to your target, and if you're using stops where the market shouldn't go, all you've done is created an enormous amount of risk for yourself. The second entry is when that small, tiny little refinement chart head fakes you. It looks like it's going up, and that little devil on your shoulder says, "Oh crap, Jeffrey, jump in, they're going without you." And Jeffrey says, "Yes, little devil on my shoulder, I will." And I see these entries right at the top. And then it goes right to the areas inside of favorable large triggers. And once again, all you've done is you've shortened the distance to your payday, and you've increased your risk dramatically, guys. Because if you jump in here, you can't have an arbitrary stop. I'm only willing to risk 8 ticks. Well, your 8 ticks is right at support inside of favorable large triggers, right where the market is likely to return and bounce. But if you learn to trust, if you learn to wait for the area inside of favorable large triggers, you've given yourself the least amount of risk and you've given yourself the highest profit potential, guys. And this is where the magic happens. Because more often than not, you're going to get a reversal bar in the direction of your trade, what I call a confirmation bar. This confirms that the market is now going up with the trend, that the market is now going up with the momentum, that the market is now going up with the clear path. And once you get a confirmation bar, where the market should not go changes from outside of those triggers to 2 ticks below. And this is how you're going to reduce risk. And guys, it is not uncommon to see you in this room take the perfect trade with an outstanding entry, and once you get that reversal bar, to have maybe $30 or $40 worth of risk per contract instead of having 120, 150 where the market should not go. So you've got to learn the looks. Remember those circles that we tailed with all that momentum? Those are the pullbacks on the small chart. And guys, I'm going to tell you right now, if you want to get good at this, if you want to learn to trust this entry, if you want to believe in this methodology, you have to do this. You have to go back on your large chart and circle tails when the rules are met and see if they line up with areas inside of triggers. Because if they do, guess what? You've got a trade. So let's just for poops and giggles, right? There's one with the potential to break and all that momentum. And there's one with the potential to break and all that momentum. Can we find one the other direction? There's one with the potential to break and all that momentum. And guys, just recently, hopefully someone shows me this, there's one with all that momentum and absolutely nothing in the way. So I'm going to go to my small chart and I'm going to see what those circles look like. And let me go to the start here. Am I missing it? Oh, that's back a little bit. Whoops. I think that's yesterday. That's okay. We'll just go back to it. It's like that doesn't look the same. Here we go. Right to support, but it's in between twin triggers. It's in the range where the price is most likely to continue, and it bounced right off of an area, guys. This may or may not have been your trade. Very often, when I've got 2 correction points, I insist on a reversal bar. I insist on that confirmation bar, and then I'll enter. I'll pay for the confirmation because it establishes my stop instead of going below, and that's a pretty good lesson for people. So let's go back. There's another one. What did it look like? Let's just see. Once again, right back to support, right in the correction zone, guys. Not the perfect look. Maybe you wait for confirmation. But if you did, It was easy money all the way to the fib. Here's a couple more shorts. Are you guys with me? Trina Boy. It's a lot on day 1, day 2. And guys, once again, right off the mid-band in between. We see it a lot. I know that it is. But if you keep it basic, if you keep it focused, most current bar on crude oil, do I have odds favorable momentum? Let me ask you this question. What do you guys think? Give me a Y or an N in the room. My large triggers are down, but my small triggers are up. Jeffrey says no, because the colors don't match. How easy is that? Jeffrey, perfect. And here's the thing that you got to do. I don't have momentum. To hell with this market. There's nothing for me to do. So now here's the S&P. Do I have odds favorable momentum on my most current bar? Smalls above the large. Look at the separation. What do you guys think? Is that a market with the potential to push in the direction? Absolutely, Walter. Guys, it's that easy. This is the easiest lesson that you'll ever have. So what you have to do, well, you don't have to. I can't make you do anything. It turns out I'm not the boss of you as much as I wish I was. There's a way to get to where you want to be, guys, and it's all just recognition. Everything is patterns. Everything is taking pictures of the same damn thing until it sticks in your brain. Repetition creates recognition, guys. So this is chart reading 101. Take 25 pictures of strong triggers. Let that be the first thing you do. Take 25 pictures of strong triggers, and every time you take that picture, annotate your chart. Talk about why the triggers are strong. Talk about what it means to you. Describe it. And what you're doing is you're creating this correlation. So if I click on that one that says strong, what I've done is I've put strong triggers because the smalls are above the large. That space means strength. Odds favorable momentum, rule number 1. And then, Jeffrey, it was not odds favorable momentum. It had nothing to do with the fibs. Let's go back to it. It has nothing to do with the fibs. So momentum is nothing but triggers. And watch this. If I take off my Pro Trader, if I take off this, that's a great comment. And I want you to see what I mean. Without fibs, it's odds favorable momentum, right? It's just rule number 1. And Jeffrey, what you did is you just illustrated what your brain's going to try to do. The recipe is consistent and simple, and strong triggers are always strong triggers. It's separation, and the colors match. And you have to be able to remove the fibs when you're identifying rule number 1. You have to say to yourself, fibs don't mean anything to me when I'm identifying momentum. That's my next rule. So Jeffrey, let's go to that. Let's put the template back on. I love that you said that because what it does is it opens up the door for a little discussion. So we established that we had odds favorable momentum. So now Jeffrey, do we have a clear path? Let's take it and stop it. Here's a fib and here's a fib. And I have small triggers above it and large triggers below it. So what do you guys think? Do I have a clear path? There's 3 options every time. It's a term, but it's not because the smalls are through. There's the 50-50, which is potential to break, or it's clear, large and small through. Guys, these are your options every time, and Nanda, you nailed it. It's a 50-50 look. This area has the potential to break because of that momentum. I love it. And guys, I'm telling you, these are your options every time. So first it's momentum, and then it's path, and then it's entry area. Whoops, that picture works. So what you want to do is you want to go through and you want to start taking those pictures and you want to talk about the whys. And I'm telling you from experience, you can't take 25 pictures of strong triggers. So if you're like, damn it, I can't find a trade, go back and take 25 pictures of strong triggers and let that be the basis for everything that you do. And then go back and take 25 pictures of termination conditions and a clear path. And let that be the second thing you do. and then find an entry. And what happens is you've taken the burden of looking for a trade off your plate, and you've put looking for 3 advantages that create a trade. And eventually, you'll piece these together. But you've got to learn the lessons. You've got to understand what it looks like to have strength, and then what it looks like to have weakness, which means do nothing, and what it means to have a clear path, and what it means to have a termination condition, which means nothing. And the only time you go to an entry is when strength and path tell you to. And I promise you guys, if you keep it this basic, your world is going to be easy. Your stress levels are going to go down dramatically. So I'm going to give you the high probability trend trade checklist as well. Because it's not fair of me to tell you to go take pictures and you're on day 2, right, Trend Boy? You're like, what the hell, Mark? I don't even know what I'm looking for. This shows you. This is a strong top or bottom. Termination, no triggers through, reverses the market, sets you up for the highest probability trend trade ever. Separation means strength. Together means weakness. It's universal. It never changes. No triggers through is a termination. It's not a clear path. Only the smalls through with momentum means it has the potential. And only when the small and large get to the other side is it broken. And guys, if you spent 5 days taking pictures, if you spent 5 days asking questions in this room, you would never mistake them. And then you just have to find your entries. Maybe the high probability trend trade entry first, and then working your way into those other trades because you're an outstanding chart reader. And this one even has a checklist for you to print out and put on your desktop. And I'm telling you right now, nobody has ever marked yes to everything on this checklist truthfully and done worse than 70%. And I've had some crazy engineer types go through and put it through the ringer, like back test it over a year. And they all end up 83, 84%. This gives you something to follow in the beginning as you go back. You don't have to trade live to get good. Go take pictures, circle those tails, see if the rules are met. And then finally, you have to have a plan, guys. And once again, it's not realistic for me to expect you to have a written plan right out of the gates. How could you? So I'm giving you the KISS plan. Do you notice that I try to give you the leeway that you won't give yourself? This is the KISS plan, guys. This is a stepping stone in your learning journey. My buddy Ron says that the high probability trend trade is not your get-rich trade, but rather it's the trade that teaches you to recognize your get-rich trade. And this plan is designed to optimize your chances of success with the high probability trend trade. And then through simulation study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Oh, that's wordy. Guys, once you can read your indicators, you're going to find your plan. It's going to jump off the page at you. It really will. But there's a very simple plan for consistency, and it starts with don't fight the large chart. If there is momentum up on the large chart, don't go down. If there is a line in the way, don't trade into it. And I'm telling you right now, if you can do that, if you can not fight momentum, if you can not trade into areas, you're better than 70% of the traders in the world, just right out of the gates. And then you're defining your entry, guys, because great entries create manageable trades, because great entries minimize risk, because great entries are pinpointing where the market is most likely to continue. And there's that checklist, and it has pictures for you again. I believe in the power of pictures to create the recognition that gives you confidence. Once you enter, you're going to have to manage that trade. On the KISS plan, I've given you a management plan. So we have clearly defined the entry. We've clearly defined what we embrace, what we avoid. And once you take that entry at the area where the market is most likely to continue, you're going to have to manage it. So this KISS plan is designed to keep your management every bit as mechanical as your entry. The KISS plan is designed to keep your stop movement void of emotion. It's nothing more than if-then scenarios. And the KISS plan management is designed to get you paid, because let's be honest, guys, that's the goal. The goal is to make money, to be consistent, and you don't have to make every dollar in every move. So your KISS plan management is really dependent on your ability to enter where the market is most likely to continue, right there at that mid band, right inside of favorable large triggers. And your initial stop is 4 to 5 ticks below the trigger lines, where the market should not go. And at this point, there's one of two things that are going to happen. You're either going to get stopped out, and I can't stress enough that losing a trade is not a failure, guys. I lose trades every day. My win percentage hangs in the 60% range. Losers are okay. Learn to take the correct losers. But more often than not, you're going to get a reversal bar in the direction of the trade. You're going to get that confirmation bar. And guys, this confirmation bar says, hey, life is good. Here we go. And your new point where the market should not go is 2 ticks below that reversal bar. And this is where that precision pays dividends, because you might have $40 or $50 a contract risk at this point. And that feels good, and that starts to create confidence. And you're either going to get stopped out. Again, it happens. It's okay. But more often than not, once again, you're just going to go to your first target. And when I tell you the KISS plan is designed to teach you to get paid, to learn how to get paid, to accept that getting paid is better than not, your first contract is off at $100. And $100 in the ES is in the S&P, it's 8 ticks, guys. In crude oil, it's 10 ticks. And when you hit that $100, you feel good, and your palms stop sweating, guys, and your stomach stops turning, and you stop puckering up. And guys, you're going to move your stop to break even. You're going to take all the risk off the trade. So not only did you get paid, but now you have nothing to lose. And what this does for the new user is it teaches you to trust the idea that you would never be in this trade if it wasn't for odds favorable momentum and a clear path on the large chart. And that's a look that pushes the market in the direction of the trend. And hopefully that's the look that's going to push you to your second target. And your second target is only $200 away from your amazing entry, which means one trade. That's it. One trade, 3 rules, 2 charts, $300. And this $300 typically happens in about 2 to 3 minutes. And guys, this is your high probability trend trade. There are people in this room that say, well, I don't want to take a $100 trade, Mark. I can't make a living off $100. Guys, if you make $100 4 times a day, you're making 6 figures. So I'm going to give you this as well, the daily goals. One high probability trend trade, if that's the best you do every day, is a $75,000 a year. I think you're going to be hard pressed to only find $300 a day. Throw in a break even, you're at 6 figures, guys. Double it, you're at 150, right? Triple it, you're at 2 1/4. You're at $250,000. Guys, from the very basic plan, focusing on getting paid, and that's exactly what the high probability trend trade teaches you to do, is it teaches you to get paid. And there's 2 things you have to know. You have to know why you will enter and why you'll exit, guys. When it's time to go live, when it's time to test that plan, when it's time to get a skin in the game, you have to know why you'll enter and why you'll exit. And guys, this is where participation in class pays huge dividends, because if you take 30 days to practice and you post the 5, 6, 7 trades that you take every day in this room, you have 5, 6, 7 private sessions with me every day. And you have 5 to 7 instances where we make sure that your chart read is good. And we have 5 to 7 instances where we make sure you're following your plan. And we have 5 to 7 instances where we can talk about management. And guys, I'm telling you, those add up, and those add up quick, and my voice rings in your head. Your entry rules are nothing more than patterns that have been proven to win more than they lose, guys. The high probability trend trade is just that. And your exit conditions are just when your advantage goes away. Whether it is putting a stop where the market shouldn't go. Maybe it's 3 divergences in the same price range, guys. You have to know why you're going to get in, why you're going to get out. And your rules, because they have been proven to win more than they lose, they eliminate the need to know what's going to happen next. And if you focus on the execution, not the result, it's the process that yields the results, guys. So unique rules for the trend trade, unique exits for the trend trade. Initially, it's just the KISS plan, right? And then if you add the 50-50 trade, it's a different set of rules for entry, different set of rules for exit. Momentum trades have their unique rules. HVA trades have their unique rules. That chili dog trade has unique rules. So I encourage you, once again, new users, let's get awesome at this right here. Understanding that if you give this 10, 15 days of concentrated study, you will find your next trade. You will move into these next trades. And guys, I'm never opposed to talking about anything. But I tend to nudge you guys back to simplicity. And the key to everything that we do is having a foundation. And this is going to be the end of my lecturing, and we'll go into our first break. So for you new users, I blanket. I'm going to drop this one in the room. I blanket you with conservative rules. Don't trade indeterminations, guys. Don't fight momentum. Don't enter at areas not inside of favorable large triggers. And it's not because you can't do it. It's because by not doing it, by not trading indeterminations, by having momentum, by taking the correct entry, you optimize your chances of success. And success creates confidence. And the more time you spend with it, the more you're going to see, and the door's open, but you've got to learn the process that yields results, guys, and the results just seem to follow. And that's where the KISS plan comes in, guys, and this is why I give it to you every day. If you keep it that basic, if you follow the simple rules, and if you're okay not trying to keep up with the Joneses, don't play trade police. There's people in this room at all different experience levels. You will most likely find an extraordinary level of success. And I've watched it, guys. I've watched it for nearly 5 years now. And the further you deviate from basics, the more time it takes you to become comfortable with patterns. Is there anyone in this room, just to help the new kids out, and I'm going to put my hand up. In the beginning, when John Novak is your brother and he sees things that nobody else sees, you try to trade like John Novak. And if you've ever seen him trade, I watch people do it all the time. I want his charts. I want his trades. I want his management. But the thing is, he's 27 years ahead of you guys. He's 27 years ahead of nearly everybody in this room. You're not going to be able to trade like him. Just because I have Mario Andretti's race car doesn't mean I'm going to run Mario Andretti's lap times. And that's probably showing my age. I don't know who the new drivers are. You have the same software that everyone else has, but you're going to have a plan that's unique to you, guys. Question everything. Learn the basics and give yourself a little grace. You're going to be new. And you are new. And it's pretty awesome to be new because it means that you're allowed to make mistakes all you want. So I promised you, and Ron, thank you for having the courage to say that. Nobody else wanted to. I promised you everything that you would need to be successful with the software, guys. I'm dropping my tracking sheet in the room one more time, and I'm giving you a zip file. And the zip file, you can download it, you can put it on your computer, you can study it. And what the zip file has is it has that chart reading 101 so that you can recognize the rules individually. It has the high probability trend trade checklist, so that you can focus on your entries and make sure that you're following rules. It also has the pictures of what you're looking for so that you can drill them into your brain. It has the KISS plan. And the KISS plan, actually, I didn't even share both sides of it with you. The KISS plan not only has the high probability trend trade, but the KISS plan also has that 50-50 trade and how to take it. So you've already got your second trade waiting for you. It has the daily goals so that you can remind yourself you don't have to make $1,000 a day to be successful as a day trader. It has those exit conditions that remind you that every entry has a different exit depending on the trade. And then it also has my PowerPoint that I used to teach. And each and everything in that zip file is in Microsoft format, and it's also in PDF format. So you will have everything that you need to be successful. I don't hold anything back. I don't give you everything because, oh my gosh, that would be overwhelming. But what we did is we learned the rules. You have the ability to simulate. You have working software, guys. You have picture-taking software that was downloaded on. If you choose not to participate, if you choose not to study, if you choose not to practice, that's your choice, and you will get out of the software what you put into it. You've got everything that you need to be successful except the experience and the feedback letting me see what you do. So when I come back from break, we're going to look at your pictures, and hopefully you discussed momentum, path, and entry, because that's exactly what I'm going to discuss, no matter what kind of trade it is. I need you guys to tell me why. And that's one of the biggest things. And you guys that are experienced, that are taking trades outside of what the high probability trend trade is, I want you to remember that this is an educational room. And I want you to post why, or I'm going to rip your charts apart and we're going to talk about momentum, path, and entry. And you're going to say, but my rules, well, if you don't write them on the chart, guys, I just have to assume you're a Yahoo breaking rules. Not really. But I want this to be educational for everybody. So I'm going to go back to the 3. So when I come back, we're going to do it. But before I do, I want to do this. I want to look at the live market. This is the S&P. Do I have odds favorable momentum on my most current bar? What do you think, guys? There's my small triggers, space to the large triggers. Large triggers are getting wide. Do I have strong triggers? Yes, absolutely I do, without question. Whoops, that's not what I needed. If you forget to close your untitled workspace, you get a big blank thing when you go between. There we go. Crude oil. Gary, we're not talking about anything other than momentum. Crude oil, do I have momentum? But Gary, that's Gary showing what happens when you know your plan. You go straight to termination conditions. All right, what do we think? Do I have momentum? My smalls are up, but my large are down. These are green, those are red. The colors don't match. No. Pretty easy, right? And guys, if I don't have momentum, I don't care about my path. I'm going to wait for momentum. And then Gary said it, price reached Fibonacci support no matter what color that fib is. All my triggers are above. So new users, can you see that how on the most current bar, I do not have a clear path in the moment? That's important. But momentum is pushing it, which is why you may find trades later. All right, I'm going to go away. I'll leave you guys with the S&P. When I come back in 5 minutes, we're going to start looking at all the charts. We're going to answer all your questions. And again, I'm going to encourage you guys, play along and participate, because the more you do, the easier it becomes. I'll see you in 5 minutes. All right, we are unmuted, and I'm scrolling to the top to look at what's been going on in the wonderful world here. So, let me get to the beginning, and Miss Jen got us going bright and early, 6:09, and I love this. Odds favorable momentum, clear path, strong bottom, pull back to support inside of favorable large triggers, and she makes money. And guys, this is everything. This is everything that we just talked about. So steal that picture. Go up there, grab it, get your spreadsheet. Find an open spot. Oh, and look at that. This is right below one of her other trades. Make the Hall of Fame, guys, by showing me these trades. Jen's perfect trend trade. There it is. Outstanding. And then everything says down, room to the target, perfect entry. She gets in on a reversal bar, out at trouble, out again, absolutely beautiful. Momentum and path, takes center stage. There it is again. Another odds favorable, room to target, perfect entry, out at trouble. And then Jen, let me read what that said. This was a trend trade, stopped out a second contract, managed incorrectly. Trend trades, no need to get out at reversal bar marker, should have held until fibs on the large. And I love that. Guys, if you don't think you'll make some sort of error in the moment, you will. I still do. I'm not going to lie. But what she did is she didn't just accept it. Jen said, wait a minute, this was a trend trade, not a momentum trade. And the idea behind a trend trade is the next key area. I should have held this one because where did it pull back to? Does everybody see that? It pulled back to resistance right inside of favorable large triggers on its way down with odds favorable momentum and a clear path. And Jen's exit is where an entry should be. And that would have been better to add this contract back on than to take the second contract off and then get paid at the lines. Jen, great trading though. Absolutely beautiful trading. And when you can make mistakes and still make money, that's pretty outstanding, I think. And then I want to post this one more time because I dropped it in the room. Guys, you know where these areas are. You know that they can create troubles. You know that the large crowd is most likely to react at them. I had to put this one in there because once you believe in rule number 2, you get rid of a lot of losers. It's the most broken rule out there. All right, Joel. Joel has a, yeah, NASDAQ always does, doesn't it, Jen? Is it slowing down a little bit for you, though? Do you feel like it's easier to read than it was 2 weeks ago when you couldn't stand it? It's funny how a little practice helps. Yeah. Garanimals, I do. If the colors match on the hanger, the clothes will match. I like that. I didn't know that one. So Joel says, check it out, Mark. I've got odds favorable momentum, and I'm coming from a strong top, and I've got that 50-50 look, that area with the potential to break. And his rules say that if there's no divergence on the 5-1, take it. And if there is divergence, well, maybe that's not your trade. And it said divergence on the 50-50 suggests I should wait clear path. And Joel chose not to take it. What did that one do after that? That was 8:16 this morning. One of the things that I love to do is I love to go back and say, all right, my rules said don't take that trade. And let's see if we can find it. And Joel, I think it was it that one right there? 2 fibs. It's 6:15. Are you central, Joel? Oh, that's 8:15. Sorry, old eyes. So I think that was it. right there, and sure enough, it went up. Pretty cool. His plan told him that there was a disadvantage. He chose not to take the trade, and it saved your bacon, Joel. That's awesome. I love seeing that. And I think if you take pictures like Joel did of your rules not being met, and then you avoid a loser, it cements the idea that your rules are there for a reason. Your mother bought you Garanimals when you were hoping for Levi's. Everything matches the Levi's. That's true. Was I looking at crude? Man, Pete, it's hell getting old. That was crude. So let's go look again. And watch, this one will be different, right? At 8:15. Well, no, it looks like that 50-50 still failed. Let's go look. There it is. Would have stopped him right out. And then there it goes. How cool to have rules. Thanks for the heads up on that one, Pete. I'll do that sometimes, guys, and it is absolutely no problem in my world if you go, dude, you're making a mistake. So avoidable losses. That's what your rules do for you. You will take losses. Take the losses that fit the plan. Take the losses that have the advantages. Take the losses that offer you the highest chance of success. Good old boring oil, textbook high probability trend trade. Market reverse, triggers rolled up, odds favorable momentum, clear path, perfect entry. Let's make money. Absolutely beautiful, Pete. You know what? I think there's a lot to learn here, so I'm going to put this one in the spreadsheet too. I'm going to start building my spreadsheet again. I'm going to steal all y'all's high probability trend trades. And that way, when someone goes, but it doesn't work, I'm like, well, look at Pete's. It does. And why you use profit stops. If you looked at the big chart, it would seemingly go right to the fib, odds favorable, clear path, but it reversed out of nowhere and took a 14-tick gain. Got paid instead of losing the whole thing. I love it. Why not? You guys know what the goal of trading is, right? Do you guys have that written down somewhere? There should be one thing you're trying to do with your trading. And I'll tell you what, it's not impress girls. It's get paid. Get paid. That's all it is. Ah, look at that. Give Mark indigestion. Yeah, Ron, you're what we in the business call an asshole. Not really. Love you to pieces. But I will get indigestion if I see you guys breaking rules. Sitting on my hands. Look at that. Look at the indecision. And you know what's cool here? That indecision is dissecting fibs, isn't it? Fibs are where decisions are made. They can't come up with a definitive answer. And Pete said, I just don't have to be a part of that. Sitting on my hands, doing nothing, not giving money away, hoping to be the first one in. Outstanding. All right, Joel, not momentum because you're fast or above the large, right? And your large are flat. Not momentum. That's momentum. That's momentum in a clear path. And you get in 48.75, 40. So you're in right here. Absolutely love it. You get past the trouble and you ride that wave of momentum down. And it went so fast, you got out again when you got to trouble. Joel, this is outstanding. Great trade, dude. And I love it. Pulls right back, breaks, pulls, go. And you were actually 3 bars early, but that's okay. Nice job, dude. What a great trade. You haven't posted in a while. I love that you're coming back with some aggression here. All right, Sid. Why? Why did you go long with your large and synthetics down? Why did you go long not coming from a fib? Why did you go long just jumping in? Does it fit your rules? Because I can't see a large chart. I have no idea what's going on. And based on what I see here, Sid, that looks like a pretty good spot for a short. Areas inside of triggers, down, no terminations. And I love that you did it. Great job. And it's funny. Sid, you've been here long enough. Can I throw you just a little love-infused beating? Just a little one. Just smiles and hugs like a grandmother trying to protect you from a rabid dog. You're showing me an awesome winner, not showing me your large chart. You're telling me, Mark, check it out. I got in at 94 and I got out at 14, and that is 20 points, which is $400, which is amazing. Right, Sid? What an awesome trade. But you're down money, which means that you're hiding losers, which means something's not going right in your life, but you want me to think it is. And if you've got a red number here and all you're showing me is big positive numbers here, something is sideways. Something's not right. Something's not working the way you want it to. Sid, show me both charts. Let's go through it. Start writing the whys. And guys, let me tell you why I write the whys. Let me click on one of these. My job is to learn a trade that is repeatable. My job is to recognize a pattern that I know if I find it 100 times, it wins 70 to 80% of the time. That's my job, because that's where I get trust. So if I write strong triggers, and I write no termination conditions, and I write mid-band of favorable large triggers, what am I doing? I'm making sure that I have this basis, and it's repeatable. I can do the same thing every day. I can always look for momentum. I can always look for a clear path. I can always look for this one. But I'm also confirming that that's a recipe for success with my picture, riding through it. This isn't repeatable. I'm not sure what whiteboard is. Are you using whiteboard to take your pictures? So let me show you guys something pretty cool here. And guys, sometimes we need this lesson. And it's okay. I'm going to go 2 charts right now in the S&P. And what I'm looking for is 2 charts worth of information every time, guys. So whether it is Snagit or Capture Software or whatever it is, it's going to have this big red capture button. And once I click it, if I hover over one chart, it's only going to give me 1 chart's worth of information. So I need to click and drag. I need to left click and I need to drag down to the bottom. And guys, one of the best things you can do is show me timestamps, show me price. Good morning, Cindy. And these have options. So if you have Snagit, there's an arrow, there will be shapes, there's a call out, there's stamps, so it's capture software with a lot of bells and whistles is what it is. And there's things that are real important for you to talk about. And guys, it's not for me. I can't stress this enough. It's not for me. The reason we do this is because you want to be able to point at something and reinforce the lesson. Strong triggers. And you want to be able to point. And you want to be able to say, potential to break. And you want to write something clever like pull back to area inside of triggers. And what you're doing is you're reinforcing the looks. You're reinforcing the plan. And guys, this isn't for me. I can do this all day long. You drop something in here, it's easy for me to know what you were doing, and it's scary how I'm going to know what you were thinking. But hopefully you're going to come back and you're going to look at this tomorrow. And if you don't annotate, if your only annotation is in here, you don't know why you got in there. Maybe you were terrified. Maybe you tripped over the cat and fell on your mouse and it put you into a trade and it happened to be a winner. So your annotations, guys, make it repeatable. Your annotations put you in a position where you know the whys, exactly why you did what you did, exactly why you entered, why you exited. Does that make sense? And Sid, I apologize if that feels like a beating. It wasn't intended to be. But it's important to me that you guys know the whys. Anytime I tell you something, I want you to know the whys. And what it looks like is a bunch of momentum, right? And then out with a reversal bar. So again, I know why. Feel free to share that. It's a learning environment. Let's see who's next. And if the large chart was strong and fast, Sid, great trade. Missed it on the way up, caught it on the way down. Again, don't know what that means. It looks like you took a trade. That's your stop. So you went short on the 50-50. It didn't work. That's okay. And then when it pulls all the way back, gives you the gap theory, you found an entry short and took it down to support. Nice trading, Gary. Doesn't tell me anything about why, but that's okay. I know your plan. You've been doing this a long time with me. And you're doing stuff a little outside of what we teach, and that's okay. Because you're doing it well. Doing it well. Holy smokes, that's all our pictures. And then let's see where we have. Kurt, speaking of boring crude oil, you've been watching RTY, and it's been whipping around like NASDAQ. And that's what I've heard about it. There's crude oil. Crude oil's just not given an easy one, are they? Weak triggers right at a fib. Man. Sometimes it doesn't. Sometimes it doesn't give you easy trades. Sometimes it doesn't give you all the setups. 90% of your day, guys. 90% of your day is spent waiting. 90% of your day is just looking for advantages so you can turn them into trades. And I'm trying to download... I'm trying to re-download TechSmith Capture because mine won't come up, and I think it's important to get you guys the lessons on that. But mine appears to be broken, so I'm going to try and reload it. Wondering CL and ES is boring, NASDAQ's too fast. It depends on the day. Depends on the day, 10K. What are you looking for? What kind of trades are you looking for? Trend trade only? All right. It seems like between crude oil and ES, you'd be able to find one in there. Gold is a mover, but it's a little temperamental. Let's look. Crude oil's been pretty tough today, hasn't it? Not a lot of great opportunities there. So let's go to the ES and let's make sure we're not missing anything. We know that was a 50-50 with divergence. That didn't work. That was a 50-50. Those were indeterminations, and we had one 50-50 there. It did have divergence, so we're still in the 50-50 range. Man, a whole lot of patience, huh? So there was, did it win on crude oil, 10K? Did the 50-50 win on the ES? Did it fit your plan? So there have been two trades today that fit your rules. Did they fit your rules? And I'm asking for a very specific reason. Okay. So the fibs were too close. So you say, and tell me if I'm correct. It didn't get to the fib, but you felt like it was too close. Is that right? And that's okay. Because we're opening the doors for a great lesson here. Because I used to do that. Okay, well then it wasn't too close. It was a termination condition, right? Big difference. Yeah, show me. So there's a huge difference between too close and termination condition. All right, termination condition. So your rules weren't met. So there wasn't one on the ES. Yeah, no worries. But what that means is that there wasn't a trade because the rules weren't met. And I think that if you do that, if you say, wow, my rules weren't met, I didn't take a trade, then what happens is you don't feel like you missed out. You don't feel like something got away from you. You feel fortunate that you didn't take a trade into a termination condition. And then if that termination condition breaks, then you convince yourself that you need to start trading into termination conditions. And guys, I'm telling you, 90% of your day, 90% of your day is doing nothing. And I know it's frustrating. This is gold. Gold's coming off a termination condition right now. Crude oil has weak triggers at a termination condition. Nothing to do there. And the S&P is trying its darndest to break. It has the potential to break. Doesn't mean there's a trade, but the potential is there. So that's a lot of holding patterns, isn't it? You got this trade ultra focused on the large sharp momentum. After the fact, you knew that you shouldn't have. Let's see why. Not a strong bottom. Pretty close. That fib stopped printing, but that's okay. Odds favorable. So 58 to 69. So, well, actually 60 to 69. So Kurt, do you feel like 9 ticks is a little early? That might be a lot early, my friend. I like the look. I like the setup. Is that where you got stopped out at 58? Okay. Will you show me a picture of it? Like, would you mind taking a picture of that entry for me? Well, 13 ticks is an arbitrary number, isn't it, Kurt? 13 ticks doesn't mean anything. That's okay. Don't worry about writing 10K. You don't have to. Is that where you had your stop? Right inside of the triggers? Will you show me the after? Would you mind? And that's the middle of the night. On what is M6E? I appreciate that. Because I think one of the great things, Kurt, is when you take the entirety, right? This was my entry, this is where it stopped me out, and even this is what it did after. Because there can be a great lesson on stop placement. Maybe the market's a little temperamental. Maybe there's a different way to do it, right? 50-50 failed, 50-50 failed, 50-50 failed, and we're coming into a 50-50 as well. Maybe this is a market that doesn't do well with 50-50s, right? And you've got to learn the temperament. And I'm not trying to cause work for you, but I'd love to see what happened after, because I think there's some great lessons there. Even if it's a matter of stop placement and entry and creating smaller losses, even if there's a loser. You can't write on it 10K? That's okay. Can you post it in the room? If you want, you can. Or tell me what time it was and I'll go to mine. And there's those divergences on a 50-50 trade. Once again. And gold has odds favorable momentum from a termination, clear path. Did we miss our entry? Looks like we missed the best entry, a tick or two below. All right, cool. So you exited at the entry area. All right. We'll close that out and see what it does. So Kurt, you mind if we turn this into a lesson? And I want to turn this into a talking to yourself in terms of advantages lesson. So let's start large chart. Did you have odds favorable momentum? Of course, yes, it's perfect. So did you have a clear path? (50-50). So here's where I want you to take your brain, Kurt. You ready? If I have a 50-50 look, my large chart is not perfect. It's only the potential to break. Does that make sense? So this is my thought process when I look at my large chart. I've got momentum. I've got a 50-50, and if I have a 50-50, my large chart is not perfect. It's only the potential to break. And then, Kurt, the perfect entry is what? Pull back to an area inside of favorable large triggers. That's the perfect entry. Would you agree? Like, it doesn't get any better than that. All right. So, at the time of the reversal bar, my triggers are split. And what does that mean? That's 2 correction points, right? 2 places where price may return. And it could bounce off of this, and it could bounce off of this. And no matter what, if I'm going to put my stop where the market shouldn't go, it's right here. And then, Kurt, I see your entry, and I know why you didn't do it, because that's that second entry that we talk about every day when you think it's going without you, so you jump in instead of waiting for it to come to your correct spot. It's okay. You're human. So this is where my head goes. And let me know if this makes sense. And if it doesn't, that's okay. But this is how I think about things. If my large chart is not perfect, it's not high probability trend trade, is it okay to insist that my small chart is? And I see this on people that have multiple time frames. They're like, well, my 21 wasn't perfect, and my 13.2 was 50-50, and my 5.1 had divergence. Like, how much can you give away and still take a trade? So this is where, and I'm not saying that this keeps you out of it, right? Because it's a good look, and I'm going to cover that. And I'm going to give you the final thought process for me on this. If my small chart is not perfect, is it okay to insist on a confirmation bar? And all you did is you increased your risk dramatically. What if that mid-band held the way it was anticipated, Kurt? Wouldn't it suck to get stopped out at a mid-band inside of triggers, to watch your trade run away while you licked your wounds? Yeah, and that's normal, dude. That's a part of trading. And there's a reason in that PowerPoint that I present every morning. It's so intentional that I added this to it. And nothing else, I hope it reminds you that you're human. And what you did isn't odd at all. There's your entry right there, number 2. This is the damn it, it's going to go without me entry. When that's always the best. So you're awesome for dropping this in the room. And I hope that train of thought is helpful. Because I really do. Every time I look at my chart, every time I look for a trade, honest to goodness, Kurt, I go through it exactly what we did. I go to my large chart read and I decide, is it right? Is it wrong? Is it good? Is it bad? And then there are times, Kurt, where I'll let my small chart be a tiebreaker. If my large chart isn't absolutely perfect, but my small chart is the low risk, best of the best, holy shit, I can't believe how wonderful it is entry, I might take it because it's worth it to me to take $50, $60 for the potential to get to the next area. But once you start speaking to yourself in terms of advantages, it becomes easier to commit to those advantages, I guess is where I'm going with that. And then, man, 10K making me go around here. So you had a 50-50 trade in 10K. Smalls were below, large were not. Area inside of favorable large triggers. You could have taken this trade. This is the potential to break, the best momentum ever, and it's a relatively low risk entry. Right at the area inside, your stop goes just above the triggers. Once you get a confirmation bar, you've got 4 or 5 ticks of risk, and it goes back and retests trouble. And I asked you about this one, and you say 1002 is the entry. That's a termination for sure. And that was a fib update that got you. That fib update happened like right when it was happening. So yeah, no worries. You chose not to trade into it. You chose not to trade into it. And then once it had the potential to break, you definitely had the opportunity. And that's okay if divergence keeps you out. The same way it always has been. So check it out. If the small triggers break the area, but the large are above, and there is potential, and there is odds favorable momentum, that fib has the potential to break. And you can take an entry based on that potential, but must manage aggressively. We're gonna go find a real world too, but I'm gonna give you this. That is the recipe for potentials to break. So let's go look at some live market stuff. What do you say? Discard. I don't need that. And I'm gonna do it like this. All right. So let's go through and do the whole thing. Price reaches Fibonacci support. All my triggers are above. Does everybody see that is a termination condition? Because it's price reaching that has me look for the triggers, and then it has nothing to do with price after that. So still a term, still a term, still a term, still a term, still a term. Does that make sense, everybody? That is 1, 2, 3, 4, 5, 6 bars worth of termination condition there. And remember, this is brand new, so 10K, does that make sense? You can't ignore me after you ask for a lesson. That doesn't work for me. It's okay. So 10K, my suspicion is that you need to learn the rules for termination conditions. You see, it doesn't matter. Here, now you don't see that it's gold. It's still a termination condition. No, you don't. Look at my chart. All right, so we're gonna write a lot here. Because, so 10K, my suspicion is that you don't understand the recipe for a termination condition, and that's okay. You don't have to, but check it out. If price reaches an area, and in this case it's support, And let me make sure that I put a shape on there so you know exactly where I'm talking about. If the triggers remain above support, it is a termination condition. No trades into the area. So the recipe for a termination condition is first, price reaches the area. Second, triggers don't break. And that's the easiest way. So when I say, do you recognize this as a termination condition, your brain has to automatically say, price reach the area, the triggers are above. Price reach support, the triggers are above. And that's a termination condition. That's always a termination condition. Does that make sense? And what I was doing is, check it out. There's where it becomes a termination condition. Until then, it might be a target, right? Like if I found a short up there, it's a target, it's a target, it's a target, it's a target, it's a termination once I hit it. And it remains a termination until both the small and the large triggers get below it, and then this area is broken. But notice that it hit the next termination condition once this one was officially cleared. And you're thinking to yourself, man, that's crap. That's a termination. That's a termination. How am I ever supposed to get paid? That's where this look comes in, 10K. And it begins with odds favorable momentum. So you have to be able to recognize strong triggers. And then once you have strong triggers, small and large haven't cleared yet, so it's definitely not a clear path. But the small smashed through that area. Do you see it? I mean, the smalls absolutely decimated support, and the large are lagging. Because of this momentum, this area has the potential to break. And there may be an opportunity in there. Let's see where this lines up. With a pullback right to the areas in between the triggers, and maybe you take that trade down based on the potential to break. And this is kind of the second trade. So there's always three options when price reaches an area. And let me go to it because I've got a pretty cool picture that shows all of them. And this is what it looks like as areas break. Then don't take them. But there's a difference between there not being trades and you not being comfortable taking the trades. Would you agree? Okay. I love that thank you for interacting. So 10K, if you've sat through my lessons, if you've sat through that first hour and paid attention at all, took a couple notes, whatever, this reversal bar signals the beginning of the fight, right? This reversal bar signals the beginning of the pullback. With me? Cool. Your triggers define where price may return. Somewhere from the bottom of the triggers to the top of the triggers. Are you still with me? Price may bounce off an area somewhere in this range. And it did, didn't it? The triggers define where the price bars may return. The areas define where it's most likely to bounce. But the one thing that you have to remember, and this is where the first part of the lesson pays dividends, is you have to understand that price can always go to the top of those triggers. It can always go all the way up there. You'll never know, 10K, never. So if you're like, man, the triggers are split and price might go to the top, watch this. You can say to yourself, you know what, I'll take this trade because of momentum, because of the potential to break, because of strong triggers, because of no divergence, but I'm going to force the small chart to create a down bar. And I'll get in once I get that down bar, because what it does for me is it says, Mark, your stop goes there now. Now you can protect yourself. Now you don't have to put $300 worth of risk on this trade with that confirmation bar. Now my risk is established 2 ticks above it. Does that make sense? So what happens, 10K? Have a good one, Ron. And guys, I say this often, and I try to say it loud. If you learn the very basics, if you learn how to execute this trade, and you understand the rules for momentum, and you understand the rules for termination, potential to break, and clear path, and you learn the rules for entry, and not just area inside of triggers, but I go really deep into the whys. Why are they inside of triggers? Because triggers define where price may return. Areas define where it's most likely to bounce. The triggers also define where your stop should go. So when you start taking these very basic lessons and then you practice them and you go back and you look at them, what happens is you start to find the next trades. You start to find the trades that aren't perfect. And here's another great example. I've got smalls below the large and my path is clear, but my reversal bar dissected support. So there's no way that support is going to be my entry area because I have to wait for the reversal bar. And this is on the wrong side of triggers. This is where my stop goes. So I'm not going to arbitrarily enter at a mid-band. And I can wait for the confirmation bar, right? And I still might get stopped out. And then I have to decide if I'm willing to take it a second time. Because when it's not perfect, it's rarely as easy as when it is. And there's where it is right there, and this is a great example. My potential area is on the wrong side. There's one-to-ones. It's great momentum. Maybe I wait for a confirmation bar. It establishes my risk. So I think that the language that I teach every morning and associating words with looks, what it does is it creates this idea that this is my best look, this is my okay look, this is my horrible look, and I'm only going to commit to one of them. Does that help a little bit, 10K? It's almost, and I've been accused of trying to oversimplify it too much. But once you learn how to, execute this plan. Once you learn how to execute this plan, you begin to understand that there are a lot of opportunities, but you've got to learn these lessons so you don't hesitate on the good ones. And you don't talk yourself out of the good ones. Going for 25 hunt for the pictures? I love it. I love it. And post them in the room if you need help. And guys, I'm at a point in my life where all of these reads are instantaneous for me, but it wasn't always that way. I had to post in my brother's room, and if you know anything about John Novak, he's not nearly as warm fuzzy as me, especially when you're his brother. And he used to beat the hell out of me live in front of everybody, and it was all great lessons, but they weren't always fun. I try to make the lessons fun, guys. So when you don't understand something, it doesn't matter to me. It's okay. We're just going to find a way so that you can get that understanding. But if you don't post in the room, if you don't have the conversation like 10K just had, I don't know what you need help with. And if I don't know what you need help with, it's difficult for me to come up with a lesson to help you. And I hope that made sense. And so the S&P, do I have momentum? Of course not. The colors don't match. Do I have a clear path? I don't have a clear path up or down. So guys, what do you suppose is my best option right now? Without momentum, without a clear path. And some of you might be saying, well, how come there's not a clear path? Sit on the hands. Amen. You remember the recipe? Oh, absolutely, 10K. Man, it's great to have you back in the room. No triggers through, not a clear path down. No triggers through, not a clear path up. Sit on your hands, Gary. You nailed it. And 10K, keep it up, man. There's nobody that can't be fixed or taught. All I need is for you to say, hey, help. And I got you. That's what makes my day fun. I'm going to take a break. Again, because I think sitting in a chair for too long is bad for the soul, and it's definitely bad for my back. When I come back, this is your class, ladies and gentlemen. This is your class. And Sid, we're going to start with your picture from 1040 once I come back. And then we'll look at whatever's posted. We'll talk about whatever's posted. Hey, help. What do you need, bud? Do I need to skip my break and look at your picture? That's a lot of sideways. What do you need help with, Sid? Let me help you. The pick was from the earlier one. Definitely doesn't help. Let me show you why. It looks like you had the termination condition. Probably on your large chart too. Let me go back and find the other one. Here we go. You entered at 94. 94 is off screen. So they don't line up. You entered at 94 on the other chart, which is above everything here. Whiteboard. That's what I was saying, whiteboard. Is whiteboard a program? It looked like you took the perfect momentum trade. I just don't have the momentum to verify it. And it's okay, guys. I don't always understand your questions the first time. Don't let me frustrate you if I don't. Sometimes it's me, not you. The second pick is what you were trying to describe. So you were trying to describe this look. And whiteboard is keeping you from doing that. And I apologize. I promise I'm not trying to be difficult. I don't always understand the question. You called that the whiteboard. So your picture taking software you're calling the whiteboard. Okay. So I'm with you. So you're just talking about the ability to write and talk and do all that stuff. I got you. So let me see if I can get TechSmith to capture, or TechSmith capture to load up here. For whatever reason, it's not opening for me. No, that's ClockSync. That's not what I want. Is that what you're using? Are you using capture? You're going to get Snagit? Okay. Snagit, I think, makes it so much easier. Go away, Norton. Because there's bells and whistles on Snagit. And everything you need is up here. Arrows. And you could do text. or you could do the call out. I like the call out because it makes it bold. You can do shapes like, hey Mark, look, I got in here, I got out here. And what it does is it gives me the ability to see both sides. Here's my advantages, this was my entry. So if I had to guess on your picture, that great looking momentum trade, it looked a lot like this. Your large chart would have said, hey Mark, look at the odds favorable momentum. I'm starting to break the area. I have room here. And this is just me. It's a communication thing. Okay, so you're using this picture to enter. So you're making me guess a lot, Sid, which is okay. Your entry was 94. You don't have 94 even visible on this chart. So I'm not sure what 30 point, okay, the pick is just an example. But you have rules? Of course you do. And you followed your rules. Of course you did. I think that my only point, Sid, and forgive me, was that I can't follow your rules. And I don't know. And if you're excited about sharing it, I'm excited about seeing it. Because I love seeing your victories. But my only question is, why are you negative if you just took a $400 winner? That would be my question to you. Because that looks beautiful. But that doesn't reflect what just happened in this picture. Something else is going on in your trading that you're not sharing in the room. And that's okay. You're not obligated to. But if you want help with something, to give me an idea how to help, okay. And I'm going to give you an idea how to help me. Show me two charts and tell me why. And that's going to give you the best feedback I could ever give you. If you show me your large chart and your small chart, show me the charts that help you make decisions. Even if it's not a large chart, if it's a range chart, that's fine. But show me both and show me how they correlate to get you into a trade. And Sid, there may be something where I say, hey, I know you jumped in right here, but if you wait for that little snapback, it's almost the same entry, but now you're above trouble. Now your triggers are on the good side of things. Or I see your exit here, and I doubt that you called the high tick before the reversal bar, but that's a loss of momentum, right? This is an area that could create a bounce. That's a problematic area. And when you get this reversal bar, there's things that could happen. So if I have some inkling of an idea of what made you choose to take this trade, then I can give you feedback if feedback is necessary. Sometimes, Sid, it's just, man, way to kick ass. Way to kill it. Way to do your thing. I love your plan. It's amazing. It makes sense to me. Good job. But the other thing, Sid, is if you tell me what your plan is, if you tell me what your rules are, I'm willing to hold you accountable to your rules. I might say, hey, Sid, this doesn't really fit what you typically show me. This doesn't really fit what your last 20 trades that were successful were. Did you deviate? Did you change something? Is your plan changed? Is there something I can do to help you, to foster learning on that plan? And that's the only reason I ask. And again, your annotation isn't for me. I can look at this one and go, cool, you have momentum, you jumped in and you jumped out with a loss of momentum. Does that make sense? I'm not trying to create work for you. You have no obligation to do that. Just understand that there's not a lot of feedback I can give on this. And if you are seeking feedback, there's a way to get the best feedback. And that's the recipe. All right, I'm going to go take that break. I'll be back in 5 minutes, guys. Post them if you got them. Ask questions if you have them. I'll see you in just a few minutes. Here we go. Last hour. Weak triggers right at a fib. I wonder if there was an opportunity in between. There might have been. 50-50 didn't break. Pushed all the way up. Snapped back to support. And now we're just wondering how the market's going to react at support. I don't have any idea. Then once the areas are on the wrong side of triggers, you don't know what's going to happen. Guys, what would you like to talk about in this last hour? What can I help you with? Post it in the room. And then Gary had one for us. Let's see what Gary did. Gary says, all right, Mark, pulled back to the fib, had to take it twice, stop was tight. So you took one, got out, took your entry, and it got you again. So I'm not sure where your first entry was. It's hard to see right off the top. You tried to take it as a momentum. Gary, is that right? You tried to take it as a momentum trade, but when the momentum failed, you took it as a trend trade? Because that's a pretty good lesson right there. Yep. Momentum is a shot at trying to catch it, and then when momentum trades fail, they very often turn into trend trades. So I like that you kept your wits about you. Got in, didn't work, and sure enough, you got in and took it to the fib. Great trading, Gary. Heads up trading. It's hard when you lose a trade, especially as a new user. When you lose, you'd rather spend 10 minutes being pissed off about it than you would looking for the next trade. Guys, losers happen. And Gary, yours is a great example. Momentum trades don't always work. Momentum fails more often than it doesn't. But when the large chart's right, there's that trend trade waiting in the wings. And I think you did it great, man. New users, this is not a Nexgen entry. I love the disclaimer, Pete. But I was overdue for a home run in the big account. This entry was based on volume profile and overall trend. Eventually it turned into a Nexgen look. So 50-50 fails. You get in at the pivot stop out. And then with the large chart saying down and a prevailing downtrend, you just held it using some other indicators and made 13 grand. Nice job, Pete. It's hard to sit through those, isn't it? But I think once you get chart reads down, and there's stuff that I've used before, where when you use a large chart scenario to define, it's easier, and it gave you stop placements all the way down, reducing risk, reducing risk, reducing risk. I love it, Pete. I don't have the stomach for it. I'll admit it. I don't have the stomach to sit through that stuff. But I'm impressed by you guys that do. All right, Dave 88088. More of an edge trade, HVA trade, but the 5, 1, and 8 range both rolled up at multi-time frame fib. No 13-2 triggers, breaking the fib. Risk in the trade could always make a divergence PSO. I took the trade before divergence printed on the 13-2, realizing I have risk 61.18 below 616, which could make a divergence PSO on the 5-1, 8 range charts. Divergence PSO, fib. This is beautiful. So, Dave, let me go through the whole thing. Let me make it a little smaller. So guys, I want you to see this. We're going to start on the large chart. And the large chart is a textbook termination condition. 100% perfect. And then you did miss the easy one, trend trade down to support, but that's okay. Maybe you were doing something. So once you get the termination condition, notice that it lines up on the small chart, the big chart, the range chart. And it's too soon to go long because, man, fights happen. And then what Dave notices, and I love this, Dave says, let me get my large triggers to roll. Let me get my range chart to roll, and then I'll look for an opportunity. And he took the pullback right to the triggers. Small triggers are up. Everything is up. And he even got the third divergence for confirmation. I love the patience on this trade, Dave. I hope you're in here. I think he left. Guys, if it's really going to be a bottom or a top, your small chart's going to show it. Your small chart's going to show you those triggers rolling. And one of my biggest challenges as a trader, so let me air my dirty laundry, is trying to get in on that reversal bar and getting stopped out, and getting in on this reversal bar and getting stopped out. And if you just wait for things to roll, it's such an easier trade. And I think that's pretty common with a lot of people, is when you start getting good at reading your charts, you begin to anticipate a little bit, but you've really got to remember that your rules need to be met. And this is a great example of it right here. It can't go up without the triggers rolling. I used to hear that in my head from my brother, Dave. And look at this. I love this. And this is just a range chart. When price reaches Fibonacci resistance, it's easy to believe that resistance is going to hold. But there's a stop out and a stop out and a stop out and a stop out. But once the triggers roll, and Dave, I love that you said that, and I'm probably going to incorporate that back into lessons. If it's really going to be a top or a bottom, the large chart triggers will roll. The triggers will roll. And if you let it happen on the small chart first, the one where you hoped it would roll and the one where it did roll are the same freaking price. What a great lesson. Thanks for that, Dave. And it takes a long time to do nothing during the fight. Just wondering, you did not see that many fibs on the chart you showed. That's what killed you. Your read was right. What does that mean, 10K? This isn't your chart. This is an S&P chart trading into 6117 at 10:30. All right. So he's got different fibs than you. That's okay. Different data, different cleanouts. You can see that he's clearly done something to his charts. Could be different days back. There you go. Different days back. Ninja Trader 7. 10K, his charts aren't your charts, brother. You have to take your trades on your charts. He's using a different platform with different days back. Okay. It's a different platform. It's different ones. So trade your charts. And I'm glad that you put that. Because you got to trade what you see. And if you see a termination condition, you have to respect that termination condition. And you can't go, oh, well, Dave's chart, I should have taken it, right? No, because your chart said no. Now, if you want to switch to NT7 and maybe pay Dave a finder's fee to get with you every morning to make sure, what it was, I don't know. I don't know, 10K. If you're concerned with your charts, and this is and guys, I say this from the bottom of my heart. If you're concerned with your charts and you don't trust them, get with Jason. Well, then you can't use it. Why would you want to? Get with Jason. If you're concerned, 10K, get with Jason. Say, Jason, do me a favor. Will you make sure everything's right? And he will. And you'll have peace of mind. And I've done it. And I've done it with my brother. And 10K, I've gotten with my brother in the morning. And I'm like, dude, our fibs don't line up. And we'll go through the process together. We'll both delete histories. And we'll both rebuild databases. And we'll build new charts and see if we line up. And usually a full scrub gets us on the same page. But tick data can corrupt. So Jason is an awesome resource to make sure there's not something weird going on, because he's seen all the weird stuff. I would definitely encourage that. But don't compare yourself to people in the room, because different data providers might be one tick off, and one tick off could create a divergence for one of you and not a divergence for another of you. Sometimes people are on 7 instead of 8. Sometimes you're in Eastern time frame and I'm in Central time frame, and we have different midnights, and there's all these different things. Sometimes you're 10 days back and I'm 11 days back because I'm testing something. So I always encourage people, trade your charts, and if you have a concern about your charts, either rebuild or talk to Jason and go, Jason, I just need a quick heads up. I want to make sure that I didn't change something that shouldn't be changed. I like it. Good eye, though. And it is frustrating when you see someone else's charts that would have given you the trade that you stayed out of because your rules weren't met. I've done it. I've done it. But it wasn't the perfect one on your chart, was it? 10K? It wasn't perfect on your chart. That would be like getting pissed off every time somebody got married to their perfect girl. And you're like, oh shit, my wife's not the perfect girl because he has the perfect girl now. You had terminations, man. You did a great job. You followed your rules. But it was a 50-50. It had a divergence. It gave a reversal bar. You had everything you needed to take that trade. If it fit your rules, you had every tool that you needed. You didn't need an 8 range. You didn't need NinjaTrader 7. You just needed a plan that said, that's my entry. And if you had that plan, that would have been your entry. But you don't. Something kept you out of it. What was it? It sure as hell wasn't Dave's charts. What kept you out of it, 10K? Was it the divergence? Was it because you didn't understand 50-50s completely? Was it because you didn't trust the area inside of favorable large triggers? So there's too many fibs. There's one fib. Potential to break, potential to break, potential to break, odds favorable. What does your plan say about 50-50 trades? That'll get us to the root of it. What does your plan say about 50-50 trades? It probably doesn't say anything because I'm not sure you knew it was 50-50. So do you see how that works? You have to know what your rules are, guys. You have to know what your rules are for the trade. And 10K, let me give you a little reference here. My brother and I read indicators exactly the same. Exactly the same. We understand momentum. We understand terminations. We understand all of that stuff. And these are the pictures that he and I share every morning, every day, over and over. And we study together every day. And you want to know the truth? He uses different charts than I use. He has a different trading plan than I trade. And if I got upset every time John Novak took a winner that I wasn't a part of, I would be pissed off 24/7. And that doesn't suit me. But what I do have is a trading plan that suits me. And I have a trading plan that wins more than it loses. And I had a trading plan that allows me to be successful if I follow it. So guys, trading is an individual sport. And when I talk about what you have to learn to be comfortable to do this, I mentioned don't try to keep up with the Joneses. Don't try to trade like other people. That's a surefire way. Every time John Novak teaches this room, 15 people blow out. Did you get them on Discord, Steve? This is how you get a hold of tech, yeah? Let's see. He has one ticket in there. Is that you? 1972? That was a good year. So don't message him. Click tech support and create a ticket. So click tech support and create a ticket. That's the way to do it. He didn't give any messages that he wasn't. So make sure that you actually start the ticket. I don't think he checks messages. I really don't. I think that he looks for tickets. But it shows he's online. Uh-oh. Did I lose my... Shit. Can you guys see my stuff? No, I'm still streaming. Oh my gosh, I did something. I panicked. Guys, excuse me 2 seconds. I'll be right back. All right. Sorry, I had to let the dog out. If you did the tech ticket, I don't want to open it because it'll mess with them. But if you did the tech ticket, I put another one in. But there's only one ticket, and I don't know if that's yours. And 10K, did that make sense, man? Somebody else might not have termination conditions here. It doesn't mean that I have a trade, I guess is where I was going with that. Someone else may not have this fib for whatever reason, and they're going long, and I'm like, I can't. I've got a termination. And you'll find that yeah, it's easier that way. 10K, I've tried it the other way. And I wish I could tell you how much money I've lost over the last 5 years trying to trade like someone else, trying to follow someone else's plan. Well, they're successful with it, then I should be successful with it. And it just doesn't work that way. You got to figure out what works for you. It's like dating. You'll make a lot of mistakes, a little bit of heartbreak, but eventually you find the one. And that's the one that you commit to because it's the good one. So you can take ideas, but you always have to trade your charts. You always have to trade your plan. And that's one of the reasons why when I give the KISS plan every morning, when it talks about, oops, I did it again. When it talks about your entry, I'm very specific, all caps, underlined, highlighted. It's your entry. And it may be the same as somebody else's, but it's always yours. And it's always on your charts. And it's always because of your plan. And it's always from your chart read. And that's one of the reasons why, if you've ever seen me get bent out of shape in this room, when people go, oh, going short, 69.19, and then 5 of you go short too, and it turns out this guy's a complete yahoo that has no idea what he's doing, and 7 of you just took an unnecessary loser because you abandoned your plan instantly trying to keep up with someone else. So I hope that made sense. Sometimes that makes sense. It's rare, but it does happen every now and then. And guys, remember, if you don't have a plan, I give the KISS plan every day. If you're writing your own plan, if you're looking for your own trade, you're like, I don't want to do the stupid KISS plan. Here's a cool way to do it. I'll give you guys this one. This is how I make every checklist that I've ever come up with, guys. I use this right here. So this is good too if you're practicing. Fill it out. But the key is taking 10 pictures of your perfect long, taking 10 pictures of your perfect short, and committing them to memory, and then starting to talk about how you're going to manage those, guys. And once you have a plan, the emotion kind of goes away. When you feel this obligation to adhere to your rules, it doesn't matter what you hope happens. It doesn't matter what you think might happen. It doesn't matter what happens. You just follow the plan. This is one of those instances right now, guys. See how those large triggers are so far away? When price reaches Fibonacci mid-band and the large triggers are a full bar away, price sucks back to those triggers. So there goes that lesson again. Price returns to the large triggers, which means that if you tried to go short right here for some reason, you got run over pretty quick as it closed the gap. And now it's a decision-making point. Small triggers got through resistance. Large triggers are still above it. Very often they're looking for the next fib. And that's just a pattern. But that's what we call the gap theory. That big gap very often gets closed. What can I help you guys with? We've looked at all the pictures. We've talked about the scenarios. Been virtual high fives. How to get the best feedback. You have rules. You have a plan. You have a spreadsheet. What can I do for you? All I need now is your questions. Nothing? Cam, do you have any questions? A lot of people in this room. Nobody's wondering about anything. That's okay. Doesn't bother me. Doesn't faze me. Termination. Termination. It's all right. Watch your charts. Do I have the NASDAQ up? I don't. Let's pull the NASDAQ up. Get rid of gold. Gold is silly. All right, let's pull up a NASDAQ. That's okay. Guys, I don't mind if you don't ask. I don't mind if you don't participate. But I just feel like there's people in here that might benefit from asking a question. I ask questions every day. Mike, you're looking for trend trades, right? That damn near looks like a trend trade. Oh, terminations. Okay. Had to wait for it to load. Terminations. Do you guys ever go back at the end of the day and say, man, I couldn't find anything to do? And just open it up and go, let's see if I missed something. That was a potential opportunity, right? And let's see. That one was into a termination. Don't like that. There was a tail with momentum and a path. Let's see if there was something going on there. That's a bunch of shenanigans. I don't see any of those tails. Maybe that one was good. Maybe 50-50, still momentum coming through. Do you guys ever do this? There was that one. Let's see what that one looks like. And you're like, okay, these are all potential opportunities. That's coming off of a termination condition. Everything rolled. We'll see what it does. And then once you go through and you circle these maybes, well, what did it look like on this chart? Wow. Maybe you just close your chart out just for grins. There we go, and bring it back up. Oh, this is the old contract, but I'll take this and then I'll just scroll back on it. Where are those circles? Well, That circle was support inside of triggers. That was inside of triggers as well. That was inside of triggers. That was no divergence, snap back right to the area, maybe not my trade. And I scroll back more and I'm like, whoa, I sure had to be patient. I don't see a circle. Oh, there's one, and that one pulled right back to resistance inside of triggers, and that one pulled right back to support inside of triggers. And I'm not doing this, so if you're waiting and you're not finding, guys, I want you to question if you're looking for the right stuff. I want you to question if you're following a plan, if you're looking at rules, because a lot of times the trades were there and you just talked yourself out of them maybe, or you didn't see it, or you didn't read it right. And I think doing that little historical study every day, going back and scrolling and circling large chart rules being met, lining them up with the small chart, very often you'll find that there's a lot more opportunity than you thought when you take the pressure of finding that trade in the moment. So let me get to the current contract on this one, and there might have been an opportunity. Does that I hope that makes sense. Backtesting, guys. Backtesting is one of the advantages that we have. Being able to go look at stuff without the pressure of a win, without the pressure of a loss, without the fear of getting stopped out. That one was 50-50. And if you follow the NASDAQ rules, Mike, your entry was the close on the correct side of the small triggers, and it was a pretty easy win. And then here's a 50-50 coming from a strong top. You're okay. Tell Deb I said hi. And that 50-50, if you took the first one, you had a chance to make some money. Perfect. So there's opportunities. There's definitely opportunities. I know you're waiting for one. But I like that. I do that almost every day. She's still trading on Sim? That's okay. If she's not comfortable, that's smart. You should tell her there's this place where she can come 15 hours every week and get feedback on everything she's doing in case she has a question. Type A tends to shoot first, then aim. I get that. Totally get that. My wife is too, but 20 years in trauma surgery, she got real methodical with her approach to things. So she starts trading next week. Hopefully she'll sit in my room. I don't know. It could be like when I was a personal trainer and she's like, I need help in the gym, and then I would help her and she'd tell me I was wrong. So we'll see. I might need one of you guys to teach my wife how to trade if you don't mind. This is true. All right, guys. Clearly we're done for the day. Let me